Hey, good afternoon, everyone. It is exactly 5 p.m. on Wednesday, August 16th, 2023. Hope everybody's doing well and having a great week. And just back with another video here. Again, something a little bit different, I think. So many of you might be familiar with ICT, Inner Circle Trader, SMC concepts, etc. So I'm not going to get into all that. There are literally 8 million channels on YouTube, including ICT himself, who talks about all this stuff. But this is a twist on one of the things that he talks about, and it has to do with midnight Eastern time, so 12 o'clock midnight on the East Coast, New York time, and kind of the importance of that level as kind of a bank reset level. And I'm going to show you a little bit of a twist on it as far as trading the New York session, which is the session I trade. Okay? So I'm just going to go through and I'm going to show you some charts here off the pairs that I trade and show you basically what this looks like and how I look at it. And it's pretty cool, but again, like everything, you need to go and back test this. It's very easy to do. You don't need any special software. You don't need any special indicators. You don't need anything except your charts. So regardless of what platform you use, you should be able to do this. So it's not financial advice. I'm not telling you to take trades based on this. Just something for you to look at and, check it out. Okay, so the only indicator I have in the chart, and you've seen this in some of my previous videos, is a session indicator. So it might be a little bit hard to see. In fact, let me go in here, and I can brighten this up a little bit. Okay, so it's a little easier to see. Okay, so this is an indicator. It's a session indicator for MetaTrader, and it just highlights the time for any particular session. So I have everything turned off except for New York, so that's why you only see New York. So this is the current session that's about to end for the day, and then this is yesterday, just as an example. Excuse me. And we are looking at a 5-minute chart here. This happens to be the Aussie USD. And so what, like I mentioned in the introduction, ICT talks about is 12 o'clock midnight. Okay, in terms of being an important kind of reset time for the banks in that overnight session. Okay, so what I did here is I have marked out the level on the chart where 12 o'clock midnight happens. Okay, now for my broker, that's 7 o'clock on my platform. Okay, because my trading day resets at 5 o'clock, resets over to 00. So obviously midnight 7 hours after that, so that would be 7 o'clock on my broker platform, which is this red candle right here, okay, right where my crosshair is. So you can see I drew a rectangle around that box. And essentially you look at that area as an area to trade off of, potentially as a magnet for price, depending where price is at the time when New York opens. Now in general, let me just show you an example first. So now you come over to here and you see this left-hand edge of this box is the start of the New York session, okay, which on my broker is 1,500 hours, as you can see at the bottom there. All right, so that's the start of the New York session. All right, so what I'm looking for is if the price is within, and I haven't fine-tuned this exactly yet, guys, but I'm saying if the price is within, preferably within about 10 to 12 pips of this price, this midnight price, then when the market opens, I'm looking for price to either trade through this price or bounce off of it. Okay? If it trades through, in this case to the downside, then I'm only looking for shorts on the day. Okay? And if it bounces off of it, that's fine. Then we'll look for pullbacks in this case and go long. Okay? So I'm going to show you a couple of different examples. Again, in this case, price is definitely close to that, to this area. So here was our open, and if I use my tool, to the middle of this box is 10 pips. So it's certainly within the range that I'm looking at. If it's way outside, which I'll show you in a minute, you have to almost do something different. All right, so or not trade that at all. Okay, so since it's within 10 pips, I'm looking for price to see what it does at the open. And as you can see today, it sailed right through this level. Okay, then we had this big pullback, and then the price went down for the larger move that lasted pretty much the rest of the day. Okay, so if price breaks through here, you're going to look for a pullback at that point and then look for a short. Now the pullbacks tend to be pretty steep on this. As you can see, it actually went past this initial entry, because really this is the swing up here. So I would be very patient, because it may not be unusual for price to actually come up and take out the New York Open. Okay, because this is a liquidity grab, right? They're trying to push price up to grab orders because people went short right here. They put their stops right here above this swing, so they force price back up, take out all these stop losses sitting right above here, and then push it down. So you got to be very careful with your stop. In this case, I would recommend put your stop up here at the next swing high. Again, this is only a 5-minute chart, so you're not talking about a ton of pips. But just to be on the safe side, put your stop up here. Don't put it in such an obvious place. The big banks, the funds, they can see the stops in the market, and they don't even need to. They know most retail traders are going to put their stops right here. So what do? They push it up, take everybody out, grab all that liquidity, and then they go. Okay? But it's pretty simple. Okay? Trade it through, wait for the pullback. Now the pullback might be shallow. Maybe it only comes back to the box and then goes, or maybe you get a deep retracement like this. You have to wait. And you just wait for your, entry signal. In this case, maybe you go down to a 1-minute chart, and as soon as price breaks this structure right here, maybe you go short right here. Okay, so let's say you do that. You went short right here. Your stop is way up where I showed you. Then, this went about 40 pips. Okay, not a huge move. Okay, but it's not bad for one pair, though, right? So there's that. So that's the Aussie USD. In this case, this is the Euro Aussie, which is exactly the opposite, okay, of the Aussie USD I just showed you. So we'll skip that one, but it's the same thing. It's just to the upside. Okay, and this is the dollar Canadian, and again, this one, same thing. This is a nice long. Here's the open right here. All right, which is only about 8 pips away from the box. So here was our midnight box. Price went through, came down, retested, see the big pullback, and then went up for the day. And I'm trying to find one. Okay, so let's talk about this one. This is the Euro JPY. Okay, now you can see here when price opened in New York, it was already way up here. See how far it is from our box? This is 38 pips from the middle of our box. Okay, 36 pips from the top. This is too far away. Okay, so what I just talked about on the other two pairs is not going to apply here. So you could do one of 3 things. One, you could just not trade this pair because the setup isn't there. That's probably advisable. That's a more conservative approach. 2, because this area tends to be a magnet for price, you could say, well, I'm going to just take a trade on a sell signal, and I'm going to trade it back down to here and have this as your profit target. Or 3, you could say, well, price is trending higher. I'm going to wait for a pullback and then just go long. Okay? So in this case, price never made it back here. As you can see, it started to come down, but it's still quite a bit away from here. So if you were hoping price would come back down here for take profit, you would have been disappointed. And if you weren't paying attention, you may have taken a loss on this. Or ultimately, you could have waited for a pullback, use an entry signal, and then go long and trade it back in the direction of where the price was trending earlier, okay, during the London session. Or, like I said, you just don't trade it at all. Okay, so I wanted to show you an example of one where it's further away than about 10 pips. I like to see it trading, like I said, on either side of this box. This is a pair that moves about 100 pips a day, so 10 pips away is still pretty tight. Okay, obviously on a pair that's traded, has less daily range, that has maybe a daily range of 60 or 70 pips, you should easily be able to find one that's close to being, 10 pips or less away. Okay? Canadian yen, same thing. Now, the difference here on the Canadian yen versus what we just saw on the euro yen is on the Canadian yen. So again, where's our New York open? Right here. Okay, 26, 27 pips away, too far. But on this one, you can see price was a magnet and it came right down to our midnight price. It fell off about 27 pips, depending where you entered. And then it bounced right off of here, came back, retested it again, and then went up for another 40. So this is what I was saying before, that if it's far away, you can either make the decision to not trade this at all, or you could look to target back to the 12 o'clock midnight range, which does tend to be a magnet, but as we saw in the euro yen, it never got there. Okay, or you could, trade in the direction that it was in before the New York Open, which was up, and wait for a pullback and then go long, which you could have done back here. Okay, maybe here, you put your stop loss down here. Now it came back, retested. But as long as you had your stop in a good spot, you wouldn't have gotten stopped out, and you could have made, those pips going back to the upside. Okay, so that's another example where it's trading further away, but it actually did get pulled back right to that to this box. Okay, because it does tend to act as a magnet for price. All right, just going along here. Here is the pound versus the dollar. Again, here's our open right here. All right, here's our midnight price, 46 pips away, too far. Right, I'm not interested in waiting for this to go through here. Okay, but we do see, and again, it did not make it back here to this range, which is between these two lines. But you can see it did, similar to the euro yen, came down and then it went up and made its move. So again, if you were hoping to trade this to the downside, that would be my least favorite option, because you're going to find a lot of times it's not going to make it there. Okay, it did on the CAD yen, but not on the euro yen. Okay, but the trend was up, so you could have waited for a buy signal and then take the up move, or just again not trade that pair at all. Moving along here, here's the euro dollar. This is another one where you could have traded this. So here is our New York Open. That is only 9 pips away from the middle of this box. You can see we traded through. Deep pullback, okay, back up into this, inside this range in here, and then the actual sell-off happened. And again, depending where you got into this, let's say worst case scenario, you got in down here, you still could have picked up 35 pips, on a 5-minute chart. Again, this is what, summertime, price is not moving very much, and a pair that only moves about 70 pips a day, you just had half your movement in just a few hours here. Okay? Euro CAD, this one was sloppy, but it did turn out. So again, here's our open right here, right at the box. Okay, right inside the box. Okay, now this one was kind of sloppy. We went down, but we never took out any structure here. Okay, so even though it did actually come down initially, and then it went back up, came back again, we had another candle here. You could have actually taken longs anywhere inside of here. I mean, this is messy. Maybe you don't take this, but we never got a structure break on these lows. So I probably wouldn't have been looking for a short. And then if you'd gotten in long anywhere in here, and then there was the move, and then, that was it. It rocketed up 37, 38 pips, and then it stopped and pulled all the way back. Okay? All right, and so that's the move there. Okay, not very clean, but it's there. Here is the dollar yen. This is a lot like the euro yen. Market opens here. Okay, 1500, 26, 25 pips away, too far. You can see price did not pull back here. So in this case, I'd be, if you were going to trade this, you'd want to trade it long. Sure enough, it did pull back and then it went. Okay. All right, Aussie yen. Again, another yen pair right here. All right, 30 pips away. Too far. Okay. This one did, like the CAD yen, did pull back into the did pull back right into this box, okay, and then went up. But again, you don't know if it's going to make it down here, but you could have, waited for this turn, and at this point, once structure was broken, maybe on a 1 minute time frame, you could have taken this long position. Okay, and you can see when it came back down, it basically came right back to this box again. So, you trade it back to the recent high, and that's it. And you take your profit right there. And finally, last but not least, the Aussie USD, which I think this is where we started. This is where we started. Okay, so I just showed you the setup for today on every single pair that I trade, and you can see essentially it works on every pair. You just have to make the decision about when you're going to actually look for a setup. Again, if you're going to be conservative about it, which maybe you should until you have a chance to back test it, trade it on a demo account, whatever you're going to do, I would look to only trade if New York opens within, like I said, about 10 pips. That's not a hard and fast rule, but on most Forex pairs, probably 10, 12 pips away from the from that midnight price, and then just wait and see what it does. Does it sell? Does it move through it, and then that's your direction you're looking for on a pullback, or does it bounce off of it and go the other way? Okay, and then there's your direction in that particular market. Okay, and that's really all you need to do is wait for your structure breaks. Trade back to previous swings or whatever methodology you want to use for exit. Just be careful because especially in the summer, we can see prices make a quick move within, an hour or two, and then it dies out and goes back the other way. That's very common, especially this time of year when, there's not a lot of volatility and follow through. So don't get greedy on these trades. Unless it's something news driven where it just blasts in one direction, it's very possible that, as you saw on most of these, even the ones that are higher pip values or higher pip daily ranges, they may only go 25, 35, 40 pips, realistically on your entry before they turn and go back the other way. So just, so don't be greedy on them. These are definitely day trades, and, you definitely need to be out of these probably long before the day ends. Hey, and if you get a trend that just continues the whole day, great, but don't plan on it. Use whatever exit strategy you want to use to get out of the trades, but that's what I would do. Okay? So, go and look at this on your charts. Again, you don't need this indicator, this session indicator. You can just mark off the New York Open yourself and then mark off, use a rectangle or whatever. Mark off the candle, that midnight candle, and I would use the 5-minute chart so you keep the range nice and small. So use that 5-minute candle for the for midnight New York time and just see what it does. Go and back test it. You can obviously scroll back and look at as many days as you want. And just, you just got to mark it off every time, and just go see how consistent it is. And that's what I'm doing. And I'm going to look at mostly pairs right now that at the New York Open, like I said, are within that 10 or 12 pip range. And I'll look for those, for those directional moves at the Open to see if it goes, through that New York Open, through that midnight time, or whether it, bounces and goes back the other way. Okay, and those ones that are further than 10 or 12 pips away, probably for now, I'll probably not trade those and just let those go and just observe what happens to see if there's any consistency in those type of moves. But as you can see, some of them did pull back to that area. Some of them just had a shallow pullback and then kept going. So not necessarily consistent there, but it depends how aggressive you are. So anyways, guys, give it a whirl. Go and back test it, try it out. Again, this is based on a little simplified twist of an ICT strategy of that midnight time frame, New York time at the bank reset. So it's worth looking at. I only trade New York, so it's not a strategy that I can speak about for the London session, although I think he probably has a strategy for that, but this is strictly for New York. So anyways, guys, that's it. I'm going to leave it there. Any questions, comments, please leave them below. Hit that subscribe button down in the lower right corner and absolutely smash that like button. Really helps the YouTube algorithm, and hope you guys get some value out of it, and I will talk to you very soon. All right, take care, guys.